Most people want to invest. It's something we hear about all the time, on the news, from friends, or even scrolling through social media. The idea of growing your money, building wealth, and securing your future is appealing to almost everyone. But honestly, most people are confused. The world of investing can feel overwhelming, filled with jargon, numbers, and endless choices. It's easy to feel lost, especially if you're just starting out or don't have a financial background. They don't know where to start. Should you open a brokerage account, download an app, or talk to a financial advisor? The first step can feel like the hardest, and that uncertainty can be paralyzing. They don't know how much money they need. Is it possible to invest with just a little, or do you need thousands of dollars? Many people worry they don't have enough to begin, so they put it off. They don't know what to invest in. Stocks, bonds, mutual funds, real estate, the options seem endless, and every choice feels risky when you're not sure what you're doing. And, they're afraid of making mistakes. The fear of losing money or making the wrong decision can stop people from ever getting started. It's completely normal to feel this way, but understanding why investing feels confusing is the first step to overcoming it. In this video, we're going to break investing down for you, step by step, in a way that's easy to understand, even if you've never invested before. There's no hype here, and we're not going to promise you overnight riches or shortcuts to success. Instead, we'll give you a complete beginner's guide to investing, covering the basics, the key concepts, and the practical steps you need to get started. By the end, you'll have a solid foundation and the confidence to take your first steps into the world of investing, no matter your background or experience. By the end of this video, you'll have a clear understanding of how investing actually works, even if you're a complete beginner. We'll break down the basics in simple terms, so you'll know exactly how to get started, step by step. You'll learn what types of investments are available, from stocks and bonds to mutual funds and ETFs, and how to choose the right ones for your goals. We'll also cover how to think about the stock market, including common myths and mistakes to avoid. By the time you finish watching, you'll feel confident and ready to take your first steps toward building wealth through smart investing. Sits in a savings account. It loses value to inflation. That means what you can buy today with your hard-earned cash will cost more tomorrow, and your savings alone can't keep up. You work hard for your money, so make it work for you. Imagine your money as an employee. Don't let it sit idle. Put it to work so it can earn more for you, even while you sleep. It's time to become a warrior in your own financial life. You have the power to change your story, starting right now. I know what you're thinking. It's too complicated. I don't know where to start. Stop. Fear is the enemy of wealth. Everyone feels uncertain at first, but the only way to learn is to begin. We're going to clear up the confusion right now. You don't need a finance degree or a Wall Street background. All you need is the willingness to take that first step. Investing isn't about being a Wall Street genius or having $1 million. It's about taking the first step, no matter how small. Even a few dollars can start your journey. Decide you deserve a secure future where your money grows for you day and night. Picture yourself years from now, enjoying the rewards of the choices you make today. This isn't a dream, it's a plan. And every plan starts with a single intentional action. If you plant a single seed, you have the potential for a tree. That seed might seem small, but with time and care, it can grow into something incredible. If you never plant it, you get nothing. Opportunity passes you by, and your future remains uncertain. Your money is that seed. Investing is planting it so it can grow into a mighty financial tree. The sooner you start, the bigger and stronger that tree will become. The best time to plant that tree was 20 years ago. The second best time is today. Don't let another day slip by wishing you'd started sooner. Not tomorrow, not next week. Today. Procrastination is the enemy of progress, and your future self is counting on you to act now. Make a promise to yourself. Read this guide with an open mind and take one action to move forward. Even the smallest step is a victory. This isn't about getting rich quick. It's about building wealth, brick by brick, dollar by dollar. True wealth is built slowly, with patience and consistency. Take control of your financial destiny. You have more power than you think, and every decision you make shapes your future. Are you ready? Because I am. Together, we're going to break through the barriers and start building the life you deserve. Let's get started on the path to making you a strong, smart, and secure investor. This is your journey, and it begins right now. Your future self will thank you. The choices you make today will echo for years to come, so let's make them count. Before you invest a single dollar, it's crucial to take a step back and make sure your financial foundation is solid. In other words, get your financial house in order before you even think about investing. The first step is to pay off all your credit card debt. High-interest debt can quickly eat away at your wealth. The interest you pay on credit cards is a guaranteed loss, and it's money that could be working for you instead. Next, focus on building an emergency fund. Aim for 8 to 12 months of living expenses, and keep it in a high-yield savings account where it's safe and accessible. Life is unpredictable. Cars break down, jobs are lost, and unexpected expenses can pop up at any time. Your emergency fund acts as your personal safety net, giving you peace of mind and protecting your investments from sudden withdrawals. Once you've covered the basics, it's time to set your financial goals. Think about what you want your money to achieve for you. Are you investing for retirement, a new home, your child's college fund, or maybe all three? Knowing your why will guide your decisions. Your investment timeline, how soon you'll need the money, determines the best investment choices for you. Money you'll need in the next few years doesn't belong in the stock market, but money you won't touch for a decade or more can grow there. Finally, create a budget. Know exactly where every dollar goes each month. Track your spending carefully, cut back on unnecessary expenses where you can, and look for ways to find extra money to invest, even if it's just a little at first. Remember, this isn't about deprivation. It's about being intentional and making your money work for you. Take control. Tell your money what to do, instead of wondering where it went at the end of the month. Once you've completed these steps, you're truly ready to start investing with confidence. Don't skip these steps. They're the foundation of your financial future. Now, let's move forward together. Let's demystify the basics. You need a brokerage account to invest. Think of it as a store for stocks, bonds, and funds. Most are online now. Fidelity, Schwab, Vanguard. For beginners, skip picking individual stocks. Focus on index funds and ETFs, baskets of hundreds of companies. Index funds track the market, like the S&P 500. ETFs are similar, but trade like stocks. Robo-advisors and micro-investing apps can help you start small and automate your investments. The key: just get started with a tool you understand. Simplicity wins. You've opened your account and funded it. Now what? Keep it simple. For most, a low-cost, broad-market index fund or ETF is the best first investment. My favorites track the total stock market or the S&P 500. This way, you're betting on the entire economy, not just one company. Historically, the market rises over time. Discipline beats genius. Consider a total stock market index fund, like VTSX or FSCAX, or an S&P 500 index fund, like VFIX or FXAIX. For a hands-off approach, try a target date fund. It automatically adjusts as you near retirement. Pick the year closest to your retirement and let it do the work. Don't overcomplicate it. Start simple, stay consistent. That's how you build wealth. Let's make this real with Maria. She's 28, debt-free, with an emergency fund, and ready to invest $100 a month for retirement. Maria opens a Roth IRA online. Tax-free growth for retirement. She links her bank account, transfers $100, and chooses a low-cost S&P 500 index fund, like FXAIX. With a few clicks, she buys her first shares and becomes an investor. The real magic? She sets up automatic monthly investments. This is dollar-cost averaging, buying consistently, no matter what the market does. Maria doesn't worry about timing the market. She just invests, month after month. This discipline, not luck, builds wealth. No fancy advisor needed, just a plan and action. Maria's on her way to financial security. $100 at a time. You can do this too. Start now. The biggest threat to your wealth isn't the market, it's your emotions. Greed tempts you to chase hot stocks. Fear makes you want to sell when the market drops. Most people lose money by buying high out of greed and selling low out of fear. The solution? Have a system and stick to it. Automatic investing removes emotion from the process. Dollar-cost averaging means you buy more when prices are low, less when they're high. Ignore the financial news. It's designed to make you act, not invest wisely. Once your plan is set, let it work. Don't check your portfolio daily. Review it quarterly or yearly to ensure your contributions are happening. Your mantra: I am a long-term investor. This is for my future. Don't let short-term noise derail your plan. Stay disciplined, stay invested. That's how you win. Let's learn from common mistakes. First, trying to time the market. No one can do it consistently. Stop trying. Second, putting all your money in one stock. That's gambling, not investing. Even great companies can fail. Diversify with index funds. Third, paying high fees. Fees eat away at your returns over time. Use low-cost index funds and ETFs. Many have expense ratios under 0.05%. Always know what you're paying. The worst mistake? Waiting too long to start. Compound growth needs time. Every year you wait, you lose future wealth. Don't be the person who says, "I wish I'd started sooner." Be the person who starts now. Learn from others' mistakes. Don't repeat them. Your future self will thank you. Success in investing comes from a simple, repeatable system, not hot tips. Your system is your blueprint. It removes emotion and panic. Start by defining your why. Write it down. This is your anchor. When markets get rough, your why keeps you grounded. Next, decide what you'll invest in. Diversified, low-cost index funds or ETFs. Automate your investments. X dollars into Y fund every month, no matter what. This is your personal investment policy. Simplicity is key. The simpler your system, the more likely you'll stick with it. Review your plan once a year. Adjust only if your goals or timeline change. Don't react to market swings. Stay focused on your plan. Your system is a promise to your future self. Honor it, and you'll build lasting wealth. That's the real secret. You've learned the fundamentals and built a plan. You've taken the time to understand the basics, and now you have a roadmap for your financial journey. You're no longer on the sidelines. You're ready to build your financial future. This is the moment where you move from learning to doing, and that's a powerful shift. The journey starts with a single step. Open your account, make your first transfer, set up automatic investing. These small actions are the building blocks of long-term success. Even $25 a month gets you started and builds momentum. It's not about the amount, but about creating a habit that will grow over time. This action transforms you from a worrier to a doer. You'll notice your confidence growing as you see your progress, no matter how small at first. As you continue, your knowledge and confidence will grow. Each step you take, each new thing you learn, adds to your financial toolkit. You might diversify further or increase your contributions. The core principles remain: invest long-term, stay diversified, keep costs low, and be consistent. These are the habits that build wealth over years, not days. This guide was about starting. Taking that first step is often the hardest, but it's also the most important. The real wealth comes from sticking with it. Over time, your efforts compound, and your financial future becomes brighter. Wealth is built in the quiet discipline of automatic contributions. Let your money work for you even when you're not thinking about it. Ignore scary headlines. Stick to your plan. Markets will rise and fall, but your steady approach is what matters most. Now, refine your process and keep building, step by step. Review your progress regularly, adjust your goals, and celebrate your wins along the way. You've laid the foundation. Now build your financial house, brick by brick. With patience and persistence, you'll create something strong and lasting for your future. The one that lingers in the back of our minds whenever we think about our financial future. How much money do you really need to start investing? Is it a number that feels out of reach, or is it something more attainable than you think? For years, people have imagined you need thousands, maybe even tens of thousands of dollars, just to get started. The idea of investing can seem intimidating, like it's reserved for people with overflowing bank accounts or family inheritances. But that's simply not true anymore. The world has changed, and so have the rules of investing. The old belief that investing is only for the wealthy is outdated. Technology has changed everything, breaking down barriers that once kept everyday people out of the market. Today, you can start investing with as little as $5. That's right, just $5 can open the door to a world of financial possibilities. Yes, $5, the price of a coffee, a sandwich, or a quick snack. It's an amount most of us spend without thinking twice, but it can be the seed that grows into something much bigger. The myth that you need a fortune is just that, a myth. It's a story we've been told, but it doesn't hold up in today's world. Too often, this myth becomes an excuse that keeps people from building their future. It's easy to feel stuck, thinking you need more before you can begin. But the most important thing isn't a pile of cash, it's the decision to start. Taking that first step is what truly matters. The doors to investing are wide open now, more than ever before. Anyone with a smartphone or computer can access the tools they need. There are tools and platforms designed specifically for beginners, making it simple to learn and grow at your own pace. You don't need a trust fund, a fancy degree, or a personal financial advisor. The playing field is more level than ever. All you need is the willingness to take the first step. It's about action, not perfection. The real investment is your commitment to begin. Forget the old rules and outdated advice that say you need to wait. The only number that matters is the one you're willing to start with. Whether it's $5, $10, or $20, what counts is getting started. Even if it's just $5, you're in the game. You're building a habit, and that's the foundation of long-term success. The world of investing is more accessible than ever. People from all walks of life are taking control of their financial futures, one small step at a time. Don't let old beliefs or outdated fears hold you back. The only limits are the ones you set for yourself. Start small, but start now. Every journey begins with a single step, and every investment, no matter how small, can grow over time. Your future self will thank you for the courage and commitment you show today. Imagine looking back and realizing you took control, even when it felt like you had little to spare. The only thing you truly need is the courage to begin, and that costs nothing at all. So what are you waiting for? Your journey starts now. Let's bust one of the biggest myths out there, the idea that you need to be rich to start investing. This belief has held so many people back for generations, making them think that building wealth is only for a select few. But the truth is, you don't need a fat bank account or a fancy job title to get started. The reality is, investing is not just for the wealthy elite. It's for anyone who wants to take control of their financial future, no matter how much money they have right now. Even if you're just starting out or living paycheck to paycheck, you can still make your money work for you. For decades, movies and news reports have painted the stock market as an exclusive club, reserved for people in suits making million-dollar deals. This image makes investing seem intimidating and out of reach for everyday people. But today, that's just not true. The world of investing has opened up, and it's more accessible than ever before. Anyone with a smartphone or computer can get started in minutes. Holding on to this old way of thinking keeps people on the sidelines, watching their savings slowly lose value to inflation year after year. The longer you wait, the more you miss out on the power of compounding and growth. In the past, investing really was expensive and complicated. You needed to call up a broker, fill out piles of paperwork, pay high commissions, and meet big minimum investment amounts. It was a system designed to keep most people out. But technology has completely changed the game. Now anyone can open an account online, often in just a few minutes, and start investing from the comfort of their home. Online brokerages now offer zero commission trades, meaning you can buy and sell stocks without paying hefty fees that used to eat into your profits. And with the rise of fractional shares, you don't need hundreds or thousands of dollars to buy into big companies. You can own a piece of your favorite brands with just a few bucks. High minimums are a thing of the past. The old gatekeepers are gone. Today, anyone, regardless of age, background, or income, can start investing. The doors are wide open for everyone. The only thing holding you back now is hesitation or fear of the unknown. But remember, every investor started with their very first step. You don't need anyone's permission, and you definitely don't need a huge bank account. The barriers that once kept people out have been torn down. You can start with just a few dollars, sometimes even less. The idea that you need to be rich to invest is simply outdated and no longer true. Investing is truly for everyone now. It's about building habits, not about having a huge fortune to begin with. Don't let old stories or outdated beliefs keep you from building your own wealth and securing your future. The market is open to all, and the opportunity is bigger than ever before. So go ahead, take your seat at the table. There's room for you, no matter where you're starting from. The only real requirement is to take that first step and start. The opportunity is yours for the taking. Don't wait. Your future self will thank you for it. Let's talk about your daily habits. Every morning, as you start your day, you make choices. Some big, some small. But it's often the small, repeated actions that shape your financial future more than you realize. Do you buy coffee or lunch out regularly? Maybe it's a quick stop at your favorite cafe, or grabbing a bite with friends during your lunch break. These little treats feel harmless, but they can quietly drain your wallet over time. Those small expenses add up fast. It's easy to overlook a few dollars here and there. But when you add them up, the total might surprise you. A $5 coffee every workday is $100 a month, wanting $200 a year. That's money you might not even notice slipping away. But it adds up to a significant sum over time. Most people think $100 a month isn't enough to invest. They believe you need thousands to get started, so they put it off, waiting for the right time. But that's where they're wrong. The truth is, you don't need a fortune to begin building wealth. What matters most is consistency and time. Consistently investing even small amounts can grow into real wealth. It's like planting seeds. Each deposit, no matter how small, helps your money grow. Thanks to compounding, your money earns money over time. The earlier you start, the more your investments can multiply, turning small contributions into a much larger sum. Invest $100 a month at a 7% return, and in 20 years, you could have over $50,000. That's the power of patience and persistence. Your daily coffee money could become a life-changing amount. It's not about starting big, it's about starting now and sticking with it. Even if you can only spare a few dollars, the habit is what counts. Consistency beats waiting for a windfall. The person who invests a little each month will almost always come out ahead of the one who waits for the perfect moment. Your future self won't care how small you started, just that you did. Find your coffee money, redirect it toward your goals, and watch it grow. That's your seed for investing. Small, regular contributions matter. Over time, they can blossom into something much bigger than you ever expected. Don't underestimate the power of habit. The simple act of saving and investing regularly can transform your financial future. Start with what you have. Even if it's just a few dollars a week, it's enough to begin your journey. Let your money work for you. Over time, you'll see the results, and you'll be glad you started. The journey begins with your next cup of coffee. Make it count, and let your small change create big change in your life. Ready to start with just a little? Micro-investing apps make it easy. These apps round up your purchases and invest the spare change. It's like a digital piggy bank that grows your money automatically. You can also set up small recurring deposits. No need to stress over timing or amounts. Micro-investing builds the habit of investing painlessly. Some apps charge small fees, so check the details. The goal isn't to get rich overnight, it's to get started. Micro-investing turns you from a saver into an investor. It's the perfect first step. Once you're comfortable, consider robo-advisors. These online services use algorithms to build and manage your portfolio. You answer a few questions about your goals and risk tolerance. The robo-advisor recommends a diversified mix of investments. Many have low or no minimums. You can start with just $1. They handle everything. Choosing investments, rebalancing, reinvesting dividends. You just add money consistently. Fees are low, often a fraction of what human advisors charge. It's a set-it-and-forget-it approach. Perfect for beginners who want professional help without the high cost. Start small, let technology do the work. So, what are you actually investing in? Most apps and robo-advisors use index funds or ETFs. These let you own a piece of hundreds of companies at once. Instead of picking winners, you buy the whole market. This is called diversification. It spreads out your risk. If one company struggles, others balance it out. Index funds are simple, low cost, and proven over time. You can buy in with just a few dollars, thanks to fractional shares. No need for big money to get started. Anyone can own a slice of the world's biggest companies. The market is accessible to all. Your ticket in is affordable. The amount you start with doesn't matter nearly as much as your consistency. I've seen people start small and build real wealth just by sticking with it. Investing is like exercise. Regular effort beats occasional big moves. Automate your contributions so you pay yourself first. When it's automatic, you don't have to think about it. Small, regular investments add up over time. Don't worry about getting rich quick. Focus on becoming an investor. Change your identity from spender to investor. The habit is what matters most. Start with what you have. Increase your contributions as you can. The key is to begin and keep going. Your future wealth is built on today's habits. Start now, no matter the amount. If money isn't the barrier, what is? For most, it's fear of the unknown, of making mistakes, of losing money. but doing nothing is the only guaranteed way to lose out. Yes, markets go up and down, that's normal. Over time, the trend is upward. The real mistake is selling in panic, not staying invested. Finance can seem complex, but you don't need to be an expert. Start with simple index funds and regular contributions. The biggest risk is never starting. Every day you wait is lost potential. Give yourself permission to be a beginner. You'll learn as you go. Start small, build confidence. The first step is the most important. Don't let fear hold you back. Your future is worth it. You're ready to invest. Now what? The choices can seem overwhelming: stocks, bonds, mutual funds, ETFs. But you don't need to analyze thousands of options. For most beginners, a simple, diversified, low-cost index fund is a great start. Know your goals and your timeline. Are you investing for 5 years or 30? That will guide your choices. Don't let too many options paralyze you. Start with a broad market index fund. Learn as you go. You don't have to get it perfect on day one. The key is to begin. We'll walk through the basics together. You've cleared the hardest hurdle, deciding to start. The next step is simple. Let's take it together. Today is the day you stop letting your money sit idle. For too long, many of us have watched our hard-earned cash simply rest in our accounts, doing little more than gathering dust. But what if, starting right now, you could put every dollar to work for you, helping you build the life you've always imagined? It's time to shift your mindset and start making your money an active partner in your journey. Whether you're just starting out or looking to improve your financial situation, you have the power to take control and make real progress. Investing isn't just for Wall Street, it's for you, right now, no matter your background. You don't need a finance degree or a fancy suit. Everyday people just like you are already taking steps to secure their futures, and you can too. Forget the fear and confusion. The world of money can seem overwhelming, but it doesn't have to be. We're here to break it down, step by step, so you can move forward with confidence and clarity. You don't need a fortune to begin. Even small amounts, invested wisely, can grow over time. The most important thing is to start, no matter how modest your first steps may seem. What you need is a plan, and that's what you'll get today. We'll help you map out your goals, organize your finances, and create a strategy that fits your life and your dreams. We'll walk through simple, proven steps to put your money on the path to growth. From building an emergency fund to understanding the basics of stocks and bonds, you'll learn how to make smart choices that pay off in the long run. Think about your dreams: a home of your own, a dignified retirement, helping your family, or traveling the world. These aren't just distant wishes. They can become your reality with the right financial habits. These are real, achievable goals. Every milestone starts with a single step, and every step brings you closer to the life you want. Celebrate your progress no matter how small, and keep moving forward. They require action, not luck. Success in personal finance isn't about winning the lottery. It's about making consistent, informed decisions that add up over time. Investing is your bridge to the future you want. It connects where you are today to where you dream of being tomorrow. With each smart choice, you're building that bridge, one step at a time. Are you ready to become the CEO of your financial life? It's time to take charge, make decisions, and steer your future in the direction you choose. This guide is your roadmap. No jargon, just clear steps. We'll walk with you, providing the tools and knowledge you need to succeed, no matter where you're starting from. Let's turn knowledge into action and start building your secure future. Every journey begins with a single step, and yours starts now. Let's get started. Your financial freedom is waiting. The biggest mistake you can make with your money isn't picking the wrong stock or missing out on a hot trend. It's simply waiting to invest. Many people hesitate, thinking they need a lot of money to get started, or they worry about making mistakes. But the truth is, delaying your investment journey can cost you far more than any market dip ever could. The real magic of investing comes from compound interest. Think of it as your secret weapon, an invisible force that helps your money grow on its own, year after year. When you invest, your money earns returns, and then those returns start earning returns too. Over time, this snowball effect can turn even small, regular contributions into a substantial nest egg. Imagine a snowball rolling down a hill. At first it's tiny, but as it keeps rolling, it picks up more snow and grows faster and faster. That's exactly how your investments work. The earlier you start rolling your financial snowball, the bigger it can get by the time you need it. Even if you can only invest a small amount each month, Don't underestimate the power of time. Those small amounts, left to grow for years or decades, can add up to a fortune. The key is consistency and patience. Meanwhile, inflation is quietly eroding the value of your savings. If you leave your money sitting in a regular savings account, it actually loses purchasing power over time. Investing, on the other hand, puts your money to work, helping you stay ahead of inflation and build real wealth. The earlier you start, the more powerful compounding becomes. Every year you wait is a year of growth you can never get back. Time is the one thing you can't buy more of, and in investing, it's your most valuable asset. Consider this: someone who invests just $200 a month starting in their 20s could end up with more money at retirement than someone who waits until their 40s and invests $500 a month. That's the power of starting early. The money has more time to grow, and the results can be dramatic. Time is your most valuable asset. Don't waste it. Every day you put off investing is a day you lose out on potential growth. The sooner you start, the more you benefit from compounding, and the less you have to invest later to reach your goals. Every day you wait, you lose potential growth. Missed opportunities add up, and the regret of not starting sooner is something many investors share. Don't let procrastination rob your future self of financial security. You can't get that time back. Once it's gone forever. The best time to invest was yesterday. The next best time is today. Investing is about respecting your future self. It's a way of saying, I care about my future, and I'm taking steps today to make it better. Your future self will thank you for every dollar you invest now. Start now, no matter how small. The important thing is to take action. Even the smallest step today can lead to big rewards tomorrow. Your future wealth depends on the choices you make today. Don't wait. Start investing now and let time work its magic for you. Worried investing is too risky? You're not alone. So many people feel anxious when they think about putting their hard-earned money into the market. Maybe you've heard stories of people losing everything overnight, or you've seen headlines about market crashes and wild swings. It's easy to let fear take over, but let's take a closer look at what's really going on. The truth is, letting your money sit in a bank account might feel safe, but it's actually a guaranteed loss to inflation. Every year the cost of living goes up, and if your money isn't growing, it's shrinking in value. That's a silent risk that most people overlook. The real goal isn't to avoid all risk, but to manage it wisely. Investing isn't about jumping in blindly or betting it all on one stock. It's about making informed choices, spreading your money across different investments, and thinking long-term. And here's another myth. You don't need to be a financial expert or have thousands of dollars to get started. In fact, most successful investors started with very little knowledge and small amounts of money. What matters most is your willingness to learn and take that first step. Thanks to technology, you can now invest with just a few dollars. There are apps and platforms designed for beginners, making it easier than ever to start building your future, one small investment at a time. The habit of starting is more important than the amount you invest. Even if you can only put away a tiny bit each month, those small steps add up over time. Consistency is the real secret to growing wealth. Another big myth? Investing is just like gambling, but that's not true at all. Gambling is about luck and chance, while investing is about research, patience, and making smart decisions. It's not about frantic trading or chasing the next big thing. Smart investing is slow, steady, and yes, sometimes a little boring. But that's actually a good thing. Boring means you're sticking to a plan, avoiding emotional decisions, and letting your money grow over time. Remember, wealth isn't built overnight. It's built through patience, discipline, and letting your investments compound year after year. That slow and steady approach is what really works. You're not trying to get rich quick, but to get rich for sure. Setting long-term goals and sticking to your plan is the real path to financial freedom. Forget the Hollywood version of investing, the one with dramatic trades, wild risks, and instant millionaires. Real investing is much simpler and much more reliable. Most wealth is built with simple, consistent strategies. Automatic transfers, regular contributions, and a clear plan are all you need to get started. Don't let myths or scary stories keep you on the sidelines. The sooner you start, the more time your money has to grow. And you don't have to do it alone. There's a whole community of people learning and growing together. You're ready to take control of your financial future. With the right mindset and a willingness to learn, you can make investing work for you. The truth is, anyone can do this. No matter your background, age, or experience, You have what it takes to start building wealth today. So let's move forward with confidence, bust those myths wide open, and take the first step toward a brighter financial future, together. Before you invest, ask yourself, why am I doing this? Your why is your financial goal. Be specific. Write down exactly what you want. Retire at 65 and travel, or save $40,000 for a home in 7 years. Attach a timeline to each goal. Short-term, under 5 years, mid-term, 5 to 10 years, or long-term, 10+ years. Your timeline determines your investment strategy. Money needed soon should stay safe, not in the stock market. Long-term goals can handle more risk and market ups and downs. This clarity is your foundation. Match each goal to its timeline. This is your personal financial mission statement. It keeps you focused and motivated. Knowing your why guides every decision. This is the first step to a smart investment plan. With your goals set, it's time to open your investment account. Think of it as a special bank account for your future. If your employer offers a 401k or 403b with a match, start there. It's free money. Don't miss out. Sign up and get the full match. No workplace plan? Open a Roth IRA. With a Roth IRA, your money grows tax-free for retirement. Opening an account online is quick and easy. Fidelity, Vanguard, and Schwab are great options. Fill out your info, link your checking account, and you're set. This is your portal to financial growth. It's a simple step with huge impact. You're ready to invest. Your account is open and funded. Now what to buy? Ignore the noise and keep it simple. Don't pick individual stocks. Buy the whole market with a low-cost S&P 500 index fund or ETF. This gives you instant diversification, owning a piece of 500 top companies. If one company struggles, your risk is spread out. Historically, betting on the whole market has paid off. Log in, search for an S&P 500 fund, like VOO, IVV, or SPY, and buy. Decide how much to invest, click, and you're done. You're now a part owner of America's biggest companies. No expertise or guesswork needed. This is a smart, powerful move for your future. Simplicity wins. You've just become an investor. Celebrate this milestone. Let's keep going. Only have $50 to start? That's fantastic. The act of starting matters more than the amount. Small beginnings break inertia and build your investing habit. Like getting fit, you start small and build up. Even $10 gets you in the game. It's not complicated, just a few clicks. Small amounts grow over time thanks to compounding. Make it a habit. Invest regularly, even if it's a little. Set up automatic transfers to your investment account. This is called dollar cost averaging, investing the same amount on a schedule. Wealth builds quietly, in the background. Don't let small sums stop you. Every dollar you invest today is a gift to your future self. The real secret to wealth? Consistency and time. Wealthy people invest regularly, not by luck or timing the market. Automatic, steady investing builds discipline and avoids emotional mistakes. Don't try to time the market. Just keep investing no matter what. The longer your money grows, the bigger your results. Start as early as possible. Even small amounts add up over decades. Plant the seed, water it, and let it grow. Be a long-term investor, not a short-term speculator. Don't panic during market drops. See them as opportunities. Trust your plan and ignore the noise. Your discipline and patience will pay off. That's how real wealth is built. Look at what you've accomplished. You've faced your fears and learned why investing matters. You've busted myths and built a simple, powerful plan. You know your goals and timelines. You've opened the right account and chosen a smart investment. You're not chasing hot stocks. You're building wealth the proven way. You know starting small and being consistent is key. You've put your investing on autopilot. You're ready to ride out ups and downs with patience. This system is repeatable and designed for everyday people. You've turned confusion into clarity and action. You've laid the foundation for lifelong financial growth. Now, let's answer the big question. How much do you need to invest to reach your goals? Hello, everyone. I'm glad you're here because today we're going to talk about something that truly impacts every single one of us, no matter where we come from or what we do. Let's talk about something that matters to every single one of us: taking control of your money. It's not just about numbers or bank accounts. It's about your freedom, your choices, and your future. You might think investing is only for the wealthy or financial experts. That's simply not true. In reality, Investing is a tool that anyone can use to build a better life, no matter how much you start with. Investing is for you, no matter your job, your age, or your background. Whether you're a student, a working professional, or just starting out, you have the ability to shape your financial destiny. Your financial future isn't a luxury, it's a necessity. It's about making sure you and your loved ones are secure, no matter what life throws your way. You work hard for your money. Now it's time to make your money work just as hard for you. Every dollar you save and invest is a step toward the life you want. Picture the life you want: retiring with dignity, helping your family, traveling, or simply having peace of mind. Imagine waking up each day knowing you're financially secure and free to make choices that excite you. None of that happens by accident. Financial freedom is built on purpose, with intention and action. It happens because you make a plan and take action. Setting goals, tracking your progress, and making adjustments along the way are all part of the journey. The world of investing can seem intimidating, but you are smart and capable enough to do this. You don't need a finance degree or a lot of money to get started, just the willingness to learn and take that first step. Today, we'll break it down step by step so you feel empowered to start. You're not alone. There's a whole community of people learning and growing with you. Think of investing like getting physically strong. You start small, learn the basics, and build up over time. Every bit of progress counts, and consistency is key. You don't have to jump in all at once. Start with what's safe and easy to understand. Even small investments can grow into something significant over time. The most important step is the first one, and you're already taking it by being here, learning and preparing to take action. No more fear, no more excuses. Your financial future starts today, and you have everything you need to begin. We'll demystify investing together. I'll guide you through proven, simple paths to security and independence. You'll see that it's not about luck. It's about making informed choices, one step at a time. You have the power to change your life, starting with small, consistent actions. Every day you make a choice to move closer to your goals. Believe you can do this, because you absolutely can. Are you ready to take control and create the future you deserve? Good. Let's get started on your journey to becoming the master of your own money. This is your story, and you get to write the next chapter. Remember, later becomes never. Start now. This is your moment. Let's begin, and let's make your financial dreams a reality, starting today. Before you start investing, you need a strong financial foundation, and that begins with cash on hand. Think of it as the bedrock of your financial house, the first step before you build anything else. But not just any cash. Don't stash it under your mattress or in a low-interest account. Instead, build an emergency fund in a high-yield savings account, where your money works harder for you. This emergency fund is your safety net for life's unexpected moments, like sudden car repairs, losing your job, or facing medical bills you didn't see coming. It's there to catch you when life throws a curveball. Without this cushion, you might be forced to rack up credit card debt or sell your investments at the worst possible time, locking in losses and setting your goals back. A high-yield savings account pays you significantly more interest than a regular bank account, so your money quietly grows while it waits for you, compounding over time. Plus, it's safe, FDIC insured up to $250,000, and always accessible when you need it most. You can rest easy knowing your savings are protected. Aim to save enough to cover 3 to 6 months of living expenses. Think rent, groceries, utilities, and other essentials. This gives you breathing room in a crisis. Don't risk this money in the stock market or tie it up in investments. It needs to be safe and ready at a moment's notice, not subject to market swings. Opening a high-yield savings account online is quick and easy. Most banks let you do it in just a few minutes from your phone or computer. Set up automatic transfers, even if it's just $25 a week or whatever you can manage. Consistency is key, and small amounts add up over time. Remember, the habit of saving regularly matters more than the amount at first. Celebrate your progress, no matter how small. Watching your savings grow will boost your confidence and motivate you to keep going. Building this fund is your first real financial victory. Once your emergency fund is in place, you'll have the security to start investing for your future, knowing you're protected from life's surprises. Protect yourself and your loved ones. This is your financial fortress. Start building it today and give yourself peace of mind for whatever comes next. With your emergency fund set, let's talk about growth index funds. For most people, the smartest way to invest is through an S&P 500 index fund. Instead of picking one company, you own a piece of 500 top US companies at once. It's instant diversification. If one company struggles, others balance it out. Index funds are passive. No expensive managers, just low fees and steady growth. High fees eat away at your returns. Index funds keep more money working for you. You don't need to be an expert or follow the news daily. Just invest regularly and hold for the long term. This strategy, called dollar cost averaging, builds wealth steadily and reduces stress. Index funds take the guesswork out of investing. Buy, hold, and keep adding over time. For most beginners, this is the single best investment. Let your money grow with the market.
Know you've been a good friend.
Now, where should you invest? In retirement accounts. These accounts, like a 401k from your employer or an IRA you open yourself, offer huge tax benefits. If your employer offers a 401k match, contribute enough to get the full match. That's free money. After the match, open a Roth IRA if you can. With a Roth, your money grows tax-free, and withdrawals in retirement are tax-free. The plan. First, get your 401k match. Next, fund your Roth IRA. Inside these accounts, buy low-cost index funds. Retirement accounts are containers. Index funds are the investments inside. Using these accounts supercharges your growth and protects your money from taxes. Your future self will thank you for starting now. Don't leave free money on the table. Make the most of these powerful tools. Invest for tomorrow, today. Secure your future. Stocks are what most people think of when they hear investing. Buying a stock means owning a piece of a company, sharing in its success or failure. Unlike index funds, individual stocks are risky. All your eggs in one basket. If the company thrives, you win big. If it fails, you could lose everything. For beginners, index funds are safer and smarter. But if you want to try stocks, start small. No more than 5% of your investment money. Only buy what you understand and believe in for the long term. Never invest money you can't afford to lose. Treat individual stocks as a learning experience, not your main strategy. Let index funds be your foundation. Stocks are the speculation on top. If stocks are the engine, bonds are the brakes. Bonds add safety and stability to your portfolio. When you buy a bond, you're lending money to a company or government in exchange for interest. Bonds are less volatile than stocks, and often do well when stocks struggle. They provide steady income and cushion your portfolio during market swings. For beginners, bond index funds offer instant diversification and simplicity. As you get older, shift more money from stocks to bonds for stability. A young investor might have 90% stocks, 10% bonds. Someone near retirement might be closer to 50-50. Bonds balance your portfolio and help you sleep at night. They're the yin to stocks yang. Use both for a resilient plan. Let's put it all together with a simple plan. Meet Jane, age 30, starting her financial journey. First, she builds an emergency fund, 3 to 6 months of expenses in a high-yield savings account. Next, she contributes to her 401k to get the full employer match, choosing a low-cost S&P 500 index fund. Once her emergency fund is set and she's getting her match, she opens a Roth IRA and invests in another index fund. If she has more to invest, she increases her 401k contributions. This three-step strategy, emergency fund, 401k match, Roth IRA, sets her up for financial independence. She keeps it simple, automated, and consistent. No complicated products, no guesswork, just steady progress. You can follow this roadmap too. Start where you are and build from there. The biggest obstacle to building wealth isn't the market, it's your own fear. Fear makes you sell low, sit on the sidelines, or doubt yourself. The financial world can seem intimidating, but knowledge is your antidote. The more you learn, the less scary it becomes. Market downturns aren't disasters. They're opportunities to buy at a discount. Start small, with an amount you're comfortable with. Build the habit and watch your confidence grow. Experience will show you that the monster isn't so scary after all. Trust your plan and stick with it. Don't let fear hold you back. Take the first step, then the next. You are capable of building wealth. Courage grows with action. We've covered a lot so far, emergency funds, index funds, retirement accounts, stocks, and bonds. These are the essential tools that form the foundation of your financial journey. With this knowledge, you now have the building blocks for a lifetime of smart investing and financial growth. But remember, this is just the beginning of your journey. The world around you will keep changing, and so will your life, your priorities, and your goals. The most powerful tool you have is ongoing education. Never stop learning. Keep learning. Read books, listen to podcasts, and stay curious about personal finance. Explore new ideas, ask questions, and seek out reliable information. Knowledge replaces fear and builds confidence, helping you make better decisions even in uncertain times. The simple plan we've outlined really works. Invest consistently in low-cost index funds within your retirement accounts, and let your money grow over time. Automate your investments and stay disciplined, sticking to your plan even when the market is scary or unpredictable. Remember, ups and downs are part of the process. Your behavior matters more than picking the perfect investment. Wealth is built from small, smart decisions repeated over time, and the discipline to keep going. You have the power to take control of your money and your future. Don't wait. Start today, even if it's with just a small step. Be proud of this step. Stay the course, and celebrate your progress along the way. Your journey to financial freedom has begun, and every step you take brings you closer to your goals. It's about putting your hard-earned cash into opportunities that have the potential to grow and multiply over time. Instead of letting your money sit idle, you put it into something with the goal of growing it steadily, year after year. It's not about chasing quick riches or overnight success, but about being smart, patient, and intentional with your choices. You work hard for your money, so why let it lose value or just sit there doing nothing? Investing gives every dollar a job. Each one is put to work, aiming to earn more dollars and help you reach your goals. This is how you build lasting wealth, create opportunities, and open doors for yourself and your loved ones. Investing isn't just for the wealthy or financial experts. It's for everyone, no matter your background or starting point. You don't need a lot to begin. You just need to take that first step and get started, no matter how small. Inflation quietly erodes the value of money sitting in a savings account, making your dollars worth less over time. Investing is your best defense against inflation and your path to true financial freedom and security. The purpose? To grow your wealth, build a nest egg for the future, and give yourself more choices down the road. Think of investing like planting a tree. Start with a seed, nurture it with care, and watch it grow stronger and bigger over time. Your investments are your financial trees. Plant them today, and they'll provide shade, comfort, and security tomorrow. The key difference between saving and investing is the balance of risk and reward. Saving is safe but slow. Your money grows little by little, often not enough to outpace inflation. Investing involves some risk, but it offers the potential for much higher returns and real growth. The goal is to manage risk wisely, making informed decisions to capture growth while protecting what you have. Being too safe means you'll never get ahead, and your money may not keep up with the rising cost of living. Calculated risks are necessary to build the future you want and to achieve your dreams. Investing is a long-term commitment to yourself, your goals, and your future happiness. It's about having the financial power and flexibility to live the life you want on your own terms. Anyone can invest, whether you're starting your first job, building a family, or planning for retirement. Don't let myths or fear hold you back from taking control of your financial future. Start small, but start now. Every journey begins with a single step, and every dollar invested is a step forward. Your future self will thank you for the decisions you make today. Remember, investing is a plan, a thoughtful strategy, not a lottery ticket or a gamble. Take control of your financial destiny and start building the life you truly want. You can't afford not to invest. Every day you wait, you're missing out on opportunities to grow your wealth and secure your future. The days of guaranteed pensions are gone. You're responsible for your own retirement. Planning ahead is no longer optional, it's essential. Social Security is only a supplement, not a solution. It was never designed to fully support your lifestyle in retirement. Relying on it alone sets you up for hardship. Without additional savings or investments, your options become limited. Investing is your most powerful tool for building a financial safety net. It's how you turn small, consistent actions into lasting security. Inflation is a silent thief, making everything more expensive over time. Even the basics, food, housing, healthcare, cost more each year. If your money isn't growing faster than inflation, you're losing ground. Your savings could buy less and less as years go by. Stocks have historically outpaced inflation, helping you protect and grow your wealth. Investing wisely can make your money work harder for you. Investing is about achieving your goals, owning a home, traveling, helping family, or retiring comfortably. It's about making dreams possible. It's not just about numbers, it's about freedom and peace of mind. Financial security lets you focus on what truly matters. When your money works for you, you gain choices and independence. You're able to make decisions based on your values, not just your paycheck. You're less dependent on a single paycheck and more resilient in emergencies. An investment cushion helps you weather life's storms. Investing is an act of self-respect and empowerment. It's a commitment to your own well-being and future happiness. It's how you take control of your future. Every step you take today builds a stronger tomorrow. Build your own safety net. No one else will do it for you. Financial security brings freedom, confidence, and peace. Invest for your future, your freedom, and your peace of mind. The best time to start is now. Stocks are shares of ownership in a company. When you buy a stock, you become a part owner, a shareholder. If the company grows, your stock's value can rise, and you can sell for a profit, a capital gain. Companies sell stocks to raise money for growth, and shareholders share in the company's success. Stocks are risky. If a company struggles, your investment can lose value. But over time, the stock market as a whole has historically grown. Some companies pay dividends, regular cash payments to shareholders. You can reinvest dividends to buy more shares, accelerating growth. With stocks, you earn through price appreciation and dividends. That's why stocks are a cornerstone of many investment portfolios. They offer growth potential, but require a long-term mindset. Bonds are loans you make to companies or governments. When you buy a bond, you're a lender, not an owner. You receive regular interest payments and get your principal back at maturity. Bonds are generally safer than stocks, but offer lower returns. If a company goes bankrupt, bondholders are paid before stockholders. There are corporate bonds, government bonds, and municipal bonds, each with different risk and tax benefits. Bonds provide stability and income, balancing out stock market ups and downs. A mix of stocks and bonds creates a balanced portfolio. Bonds are about safety and steady income. They're a key part of smart investing. Unsure which stocks or bonds to pick? Mutual funds and ETFs make it easy. These funds pool money from many investors to buy a diversified mix of assets. Buying a share gives you instant diversification, spreading risk across many companies or bonds. Mutual funds are priced once daily. ETFs trade like stocks throughout the day. Both offer low-cost, broad exposure to the market. Many track indexes like the S&P 500, letting you invest in hundreds of companies at once. This is called passive investing, aiming to match the market's return, not beat it. Index funds and ETFs usually have very low fees, so more of your money stays invested. Diversification is key to managing risk. For most beginners, these funds are the smartest way to start. You don't need to pick winners, just participate in the market's growth. Start simple, stay diversified. The most important factor in investing isn't how much you start with, it's when you start. The earlier you begin, the more you set yourself up for long-term success, regardless of your initial amount. Time is your greatest ally, thanks to the magic of compound growth, which works quietly in your favor every single day. Compounding means your earnings generate their own earnings, creating a snowball effect that accelerates over time and multiplies your wealth. The earlier you start, the more powerful compounding becomes, giving your money more time to grow and multiply. Even small amounts invested early can grow larger than bigger amounts invested later, simply because they have more time to work for you. Consider Emily and Luke. Emily invests $200 a month for 10 years starting at 25, then stops. She lets her money grow untouched. Luke starts at 35 and invests $200 a month for 30 years, 3 times as long, but he started later. Emily ends up with more money. Her head start made all the difference, showing how time can outweigh even larger contributions. Delaying investing is costly. Every year you wait, you lose potential growth that can never be recovered. Even if you can only invest a little, start now. Small, consistent steps add up to big results over time. Automate your investments so you never miss a month, making saving and investing effortless and consistent. Pay yourself first. Prioritize your future by making investing a non-negotiable part of your monthly routine. The sooner you plant your financial tree, the taller and stronger it will grow, providing shade and security for years to come. Don't wait for the perfect time. The best time to start is always now, not someday. Start today, no matter how small. Every journey begins with a single step, and your future self will thank you. Time in the market beats timing the market. Staying invested matters more than trying to predict the perfect moment. Compound growth rewards patience and consistency, turning small habits into significant wealth over the years. Your future self will thank you for starting early, enjoying the freedom and opportunities your discipline created. Make investing a habit, not a one-time event. Let it become a natural part of your life, and watch your wealth grow. Let's see the power of compounding in action. Invest $5,000 at an 8% annual return. After 10 years, it's about $2,800. After 20 years, nearly $2,300. After 30 years, over $50,000. Growth accelerates over time, the snowball effect in action. Now, imagine investing $300 every month for 35 years at 8%. You'd invest $126,000, but end up with over $620,000. The difference is pure growth. Your money working for you. Consistency and discipline are key. Dollar cost averaging, investing regularly, smooths out market ups and downs. Don't panic during downturns. Keep investing. The market will have good and bad years, but long-term growth is powerful. Stay focused on your goals, not short-term noise. Building wealth is a marathon, not a sprint. Trust the process and let time do the heavy lifting. Compounding rewards patience. The finish line is worth it. Ready to start? Follow these smart rules. Know your risk tolerance. Can you handle market ups and downs? Diversify. Don't put all your eggs in one basket. Use mutual funds or ETFs for instant diversification. Don't try to pick individual stocks. Most people lose that game. Focus on low-cost, broad market index funds or ETFs. Check the expense ratio. Lower is better. High fees eat into your returns over time. Automate your investments. Set up recurring transfers each month. Ignore daily market noise. Stick to your plan. The market will fluctuate. Don't let emotions drive your decisions. Trust your long-term strategy. Simplicity and consistency win. Let automation and discipline work for you. Invest, then go live your life. The stock market is where buying and selling of stocks, bonds, and ETFs happens. It's a global network of electronic exchanges, no longer just a physical place. Think of it as a giant auction house, matching buyers and sellers in real time. Prices are set by supply and demand. More buyers push prices up, more sellers push them down. To participate, open an account with a brokerage firm. Today, it's easy. Many brokerages have no minimums and offer commission-free trades. This has made investing accessible to everyone. The stock market is where your financial journey comes to life. It can seem intimidating, but it's simply a way to participate in economic growth. Choose a reputable, low-cost brokerage to get started. Understanding the market is your next step. It's the arena for your financial freedom. You're ready to step inside. Let's cut through the noise and make sense of what really matters when it comes to your money. The stock market isn't just for the wealthy or people in suits. It's for you. It's for everyone, no matter your background, age, or experience. Think of it as a giant marketplace, except instead of fruit, you're buying pieces of companies you know. Apple, Amazon, your favorite soda brand. Why does this matter? Because these are companies you interact with every day, and now you can actually own a part of them. Because your money in a savings account loses value over time due to inflation. What you can buy with $1 today might cost more tomorrow, and your savings alone can't keep up. Investing in the stock market gives your money a chance to grow, faster than inflation. Over time, your investments can outpace rising prices and help you build real wealth. This is how you build wealth: save for retirement, pay for college, and gain financial independence. It's about creating options for your future and for your loved ones. It's not about getting rich quick. The stock market rewards patience and smart decisions, not reckless gambling. It's about being smart, patient, and taking control of your financial future. Setting goals, making a plan, and sticking with it. Imagine you love a coffee shop. You visit often, and you see how popular it is. You see it thriving, opening new stores, and becoming a local favorite. You notice the excitement as it grows. By investing, you can own a piece of that success. You're not just a customer anymore, you're a part owner, sharing in the profits. When the company grows, so does your investment. As the business expands and earns more, your share becomes more valuable. You're not just a customer, you're an owner. That's a powerful shift in mindset. That's the core idea. The stock market connects you to the growth of the world's biggest companies. You become part of their story. This series is your guide. We'll break down everything you need to know, step by step. No jargon, no complicated math, just simple, straight talk. We'll keep things clear and easy to follow. We'll walk through this together, step by step. You won't be alone on this journey. By the end, you'll know what the stock market is, how to get started, and how to make smart choices, and how to make your money work for you. Your money should be growing, not just sitting still. You have to be a warrior for your wealth. Protect it, nurture it, and help it grow. This is your first step. Take a deep breath. Every journey begins with a single moment of courage. Let's begin your journey to financial freedom. You can do this. I know you can. The future is waiting for you. The stock market is your ticket to a better future. It's a chance to build the life you want. Don't let fear hold you back. Every successful investor started with uncertainty, but they took the leap anyway. Every investor started with a single step. Even the greatest journeys begin with that first move forward. Today, that step is yours. Let's get started. The path to financial confidence is right in front of you. Your financial journey begins now. This is your story, and you're the one in control. Welcome to the world of investing. Let's go. Your future self will thank you for starting today. Time to learn the basics of stocks and shares, the building blocks of investing and wealth creation. A stock is simply a piece of ownership in a company. When you own stock, you own a part of that business, no matter how small. Stock and share mean almost the same thing. A share is just one unit of stock. So if you own 10 shares, you own 10 pieces of the company's stock. Think of a company as a pizza. The whole pizza is the company's stock. Each slice is a share. The more slices you have, the bigger your piece of the company. Companies sell shares to raise money to grow. This is called an IPO, or initial public offering. It's how companies invite the public to become part owners. When you buy a share, you help the company grow and get a chance to share in its profits. You become a shareholder, with a stake in the company's future. Some companies pay dividends, a portion of profits paid to shareholders, usually every few months. Dividends are like a reward for investing. Not all companies pay dividends. Some reinvest their profits to grow faster, hoping to increase the value of your shares over time. To buy stocks, you need a broker, a licensed company that buys and sells stocks for you, acting as your link to the stock market. Today, this is all done online through a brokerage account, making investing easier than ever before. Your broker is your gateway to investing, helping you manage your investments and track your progress. It's simple, fast, and accessible from your phone or computer, so you can invest anytime, anywhere. That's all you need to get started. Just a little knowledge, a brokerage account, and the willingness to begin your investment journey. Ready to invest? Here's your step-by-step roadmap to get started on your investing journey. First, you'll need to open a brokerage account online. It's a simple process, much like opening a bank account, and most platforms guide you through each step. Next, fund your account by transferring money from your bank. This can usually be done instantly or within a day or two. Don't worry about needing a huge sum to begin. You can start investing with as little as $50 or $100, making it accessible for almost anyone. Many brokers now offer fractional shares, so you can buy a piece of big companies even if you don't have enough for a full share. The most important thing is to take that first step, no matter how small, and to keep investing regularly. Consistency is key to building wealth over time. Next, decide what to buy. A good place to start is with companies you already know and trust. Think of brands you use every day. Do a little research. Are these companies growing? Are they profitable? Look at their recent performance and future outlook. For beginners, index funds or ETFs are a great choice. They let you invest in a basket of companies at once, spreading out your risk. For example, an S&P 500 index fund holds shares in 500 of the largest U.S. companies, giving you instant diversification. This diversification helps reduce your risk, since your money isn't tied to just one company's success or failure. If one company in the fund struggles, others can help balance out your returns, making your investment more stable. For most people, this approach is the smartest and simplest way to begin investing and build wealth over time. So, start your investing journey today with confidence, knowing you have a solid roadmap to guide you. Let's talk about risk. Investing isn't a guaranteed win. Stock values go up and down. That's called volatility. Never invest money you'll need soon. Investing is for the long term. Businesses face challenges, competition, new technology, economic downturns. When a company struggles, its stock price can drop. But with risk comes reward. Over time, the stock market has outperformed savings accounts and bonds. That's how you grow your money. The power of compounding means your investment can multiply over years. Higher potential rewards usually mean higher risks. Your job is to find the right balance for you, your risk tolerance. Be honest with yourself about how much risk you can handle. Don't panic when the market dips. Stay focused on your long-term goals. Start small. You don't need a fortune, just begin. Investing is like exercise. Start slow, build up over time. The habit of investing regularly matters more than the amount. Think long-term. The stock market isn't a casino. It's for building wealth over years, not days. Hold your investments for at least 5 years, if not longer. The magic happens over time thanks to compounding. Avoid emotional decisions. Markets go up and down. Don't let fear or greed drive you. Ignore the daily noise. Stick to your plan. Make investing automatic. Set up monthly transfers and automatic investments. This is called dollar cost averaging. It smooths out your purchase price over time. When prices are high, you buy less. When low, you buy more. This removes emotion from investing and keeps you on track. Automate your plan and let it work for you. Consistency is your best friend. Trust your strategy. That's how you build real wealth. Don't try to time the market. No one can predict the perfect moment to buy or sell. Time in the market beats timing the market. Stay invested for the long haul. Don't put all your money in one stock. Diversify with index funds or ETFs. Diversification protects you if one company fails. Never invest money you can't afford to lose. Don't use your emergency fund or borrow to invest. Make sure you have an emergency fund and no high-interest debt before you start investing. Ignore hot tips and hype. Make decisions based on your own research and plan. Don't buy a stock just because everyone's talking about it. Be disciplined, not a follower. Stick to your strategy. Do your homework. Trust your gut. That's how you win at investing. You've learned the basics, what stocks are, how to start, and how to manage risk. You now know more than most people about investing. The mystery is gone. The stock market is a tool for your future. Your first step might be opening an account, transferring $50, or buying your first index fund. Don't wait for the perfect time. The best time to start is now. The sooner you begin, the more your money can grow. Mistakes will happen. Learn from them and keep going. The biggest mistake is doing nothing. You are in control of your financial future. Investing isn't just for the rich. It's for anyone willing to learn and be patient. You have the knowledge and the tools. Now take action. Be strong, be smart, be secure. You are now an investor. Own your tomorrow. Your journey starts today. You can do this. Let's build your future together. As the sun rises and a new day begins, it's a reminder that every journey, including your journey as an investor, starts with a single step. The world of investing can seem overwhelming at first, filled with complex terms, fluctuating markets, and endless advice from every direction. But at its core, investing is much simpler than it appears. If you remember one thing from this video, let it be this. Investing is not reserved for the experts, the insiders, or those with special knowledge. It's for anyone willing to learn, reflect, and take action. No matter your background, your age, or your starting point, you have the ability to build a brighter financial future. Investing is not about being the smartest person in the room. It's about being patient, just like planting a seed and waiting for it to grow. The most successful investors aren't those who chase quick wins or try to outsmart the market. They're the ones who understand that real growth takes time and that patience is often the most valuable asset you can have. You don't need perfect timing. In fact, trying to predict the perfect moment to invest is a game even the professionals rarely win. The truth is, Time in the market is far more important than timing the market. Let your investments grow, day by day, month by month, year by year. The power of compounding works best for those who simply stay the course. You don't need secret information or insider tips. The most important principles of investing are available to everyone. There's no hidden formula or magic shortcut. Instead, focus on what you can control: your habits, your decisions, and your mindset. What you do need is a clear process. Take the time to set your goals, make a plan, and stick to it. Write down your reasons for investing, your strategy, and your rules for when to buy or sell. This process will be your guide, especially when emotions run high or the market gets turbulent. And above all, you need the discipline to stick to your plan. Discipline means staying committed, even when it's tempting to give up or change course. It's about trusting the process you've created and not letting fear or greed dictate your decisions. Just like an athlete trains every day, or an artist practices their craft, your consistency will pay off over time. Remember, everyone starts as a beginner. Every expert investor was once a novice, unsure of their first steps. The key is to keep learning, stay curious, and never be afraid to ask questions. Mistakes are part of the journey, and each one is an opportunity to grow wiser and more confident. The real difference between those who succeed and those who don't is simple: who keeps going. The path may be long, and there will be challenges along the way, but perseverance is what separates the dreamers from the achievers. So take that first step, stay patient, trust your process, and keep moving forward. Your future self will thank you.